Okay, everybody. It is Tuesday afternoon, Tuesday evening, 7:30 Eastern Time, and I'm looking to take long trades here above 2.0637, and this one's going to have a little bit wider stop on it because I want to come down well below this consolidation here. So I'm looking to take a stop at 37 pips. Short, I'm looking to sell if the market gets below 2.0595. And again, because this is a very symmetrical pattern, I'm going to be using about 37 pips. That actually will put me just in this area here. I think if the market can get going to the downside, it should be a fast move because of how high the market is. If you look back here, you can see that when the market did finally break, it broke even though it came back up here. This break was very fast, and I think we'll get the same thing over here. So even though I am stopping out kind of in this area here, it's because I think this should be a fast move if it does manage to break. To the upside, we might get more of the same. It might be a fast break, maybe not. But here you can see the market is still dealing with, this is the high from last week. Here's the close from last week, two very important prices. And this pennant or triangle is coming in right where it should. You saw that we had a pennant pattern over here. This is when I lost power. This was the break about 9 o'clock in the evening time. You can see the push there. Now we've got a lot of wild gyrations going on. If you haven't watched the video from earlier today, I'd suggest you do that. Also, I'll have the Q&A video done tomorrow with the power outage and whatnot. This morning, I accidentally downloaded all of the emails to my laptop, so I've got to bring that into my office so I can answer those emails in here while I'm recording. And then I'll get to all of your questions for today. I just apologize for the mix-up because of the power outage. Key thing here to remember is we're probably going to see a lot of volatility because of the carry trades. Again, I won't get into a whole lot of detail on that just because it's a fairly complicated subject. But just understand that I think we're going to see a lot of volatility. So watch out for whipsaws. I really don't think the short trade is a very good trade to put on for an autopilot trade, simply because you might see the market come down and whip up. What I'm going to be using is a trailing stop to hopefully get rid of some of the effect of a whipsaw like this. I think if there's going to be follow through at this point, you'll probably see it to the upside. Let's just go up to a daily bar here. And you can see that, the trend is obviously to the upside. There's no question where the short-term, midterm trend is going to be. All the way back into March, you can see here June, the market just made this nice retracement here, pushing up. The tunnel pattern, which is being formed, is nearly completed. Let me go over here, or is completed rather. You can see that beautiful tunnel pattern. So, again, there are a lot of theoretical reasons, like I like to call them, for why the market might turn around over here. We just need to be ready for it if it happens, but we've got to balance that and not be looking for the downside so much that we miss the upside. Remember, the top of this trading lane is way up here. We're looking at, if we can extend this thing out a little bit, we're looking at the pound trading possibly at 2.09. Okay, so another 300 points to the upside. We've got to be ready to take advantage of that as the market starts moving up. And if you go back over the videos, you'll see that on a risk basis, there were just some really beautiful trades over here. The trend continuation trading is ideal to capture a lot of this stuff without getting into a lot of the pitfalls of trend following, meaning what do you do when the market is doing this